Welcome back to the Trading Desk. I'm here this week with Tim Iacano from the mess that Greenspan made.blogspot.com. Tim's a relatively new resident to Bend. Tim, why don't you tell us a little bit about how you came to move to Bend first, and then we'll talk a little bit about your blog and your research, and get into some of the details on what you're involved with here in Bend.
Well, my wife and I were fortunate enough to have saved pretty diligently during our working careers, and being relatively early spotters of the housing bubble. We sold our home in California about 4 or 5 years ago with the intention of retiring early and moving north.
So you guys were in Southern California, and then you moved to Northern California before you moved to Bend.
And we moved to Northern California in the foothills of the Sierra Nevadas, which was really beautiful. But we came to find out a few logistical problems there with shopping and so on. And
you didn't have the Costco's and Targets like we have here in Bend.
Exactly. Yeah, you don't know how much you miss them until you're 90 miles away.
Right.
And so we started looking, and we settled on Bend. Great, infrastructure, outdoor activities, and so on. And with the business that I run now, we can operate that from anywhere. So it's worked out pretty well so far.
Tell me a little bit. Your background. I know you said your wife worked in accounting. You were in the chip industry on an engineering level back in Southern California. You worked in the aerospace. And then you got into, have you always been interested in the markets and in the economy and stocks? I mean, is that always something that's driven you?
Not until I was getting pretty close to 40 years old. I started thinking about how my wife and I might retire, when it might be, and I really started paying attention to financial markets. This is, more than about 10 years ago. And from an engineering background, it was pretty clear to me at the time that the technology bubble and the housing bubble were just that they were not sustainable. And that's when I really got interested in that sort of thing. And I started the blog shortly after we sold our house because I thought it was just fascinating that this housing boom just kept going and going. Mm-hmm. Shortly after that, I started the investment website, Iacano Research, which provides weekly updates to subscribers about investing mostly in natural resources.
Right. So you're talking a lot about gold stocks, oil stocks, anything of hard nature. You do a lot of research around those areas and kind of help people with the small caps in those areas, and you do a lot of research.
That's right, and the commodities themselves, which is a relatively new phenomenon that you can buy, to be surprising to most people to hear that the second largest ETF in the world is the gold ETF.
Right.
5,
What's
10
the
years
symbol
ago.
on that? GLD?
GLD.
Okay.
Yeah, it's one of the most popular investments over the last few years. Gold as an investment, most people still poo-poo it, but it's the only thing that's gone up in each of the last 9 years.
Well, and again, if you go back and look at that chart from 2000 to 2001, gold just has a nice stair step. That's a very powerful chart there.
Most people would not like to believe this, but it's true. If you had sold your stocks in 2000 and bought gold, you would be the equivalent of Dow 45,000 or something.
Absolutely.
Somewhere around there.
So now on commodities, I find that intriguing also because there's a lot of people, we talk about Jim Rogers a lot on the show, and Jim Rogers has been talking about farmers are going to be the next bankers of the next generation. What are your thoughts there? I mean, do you think it's that extreme? I mean, do you think land is going to be at that much of a premium with population growing parabolically here? Do you subscribe to that analysis?
It all has to do with economic growth. If we have the kind of global economic growth that we've had in the last 10 years, then all prices for natural resources are going to go up significantly, including agricultural goods, which really haven't done that well over the last year or so compared to...
Yeah, if you look at wheat, matter of fact, I was looking at wheat, corn, soy. They're all at really almost 10, 15-year lows right now.
And I'm a big believer in peak oil too, but again, it comes down to economic growth. If you don't have the kind of growth rates that we're accustomed to, then all of a sudden peak oil isn't that big of a problem anymore. As we've seen over the last year, you had oil prices plummet, and that doesn't have anything to do with production, that has to do with demand. Right. When demand is the first year that energy demand has declined since the Great Depression, I believe. And
no kidding. So almost 70 years of oil being up every single year, and this year we were actually down. I did not know that.
Yeah, along with global economic growth. 2008 was the first year that it declined.
Okay. So again, we can find your info at Iacano Research.com. If you go to the website there, Tim again provides research to customers on the institutional and retail side. If you'd like to find more information, check out his website. I know he's new to Twitter. He's twittering. You can find some information, and you'll find that on his webpage also. Okay, when we come back to the trading desk, we're going to continue this conversation with Tim Iacano, talk about the local economy and what he sees as a new resident of Bend.